Okay, good afternoon, everyone. Thank you so much for taking the time. Here we are, early October, which also happens to be my birthday month. We're going to make it a great month. We're also coming into the end of 2024. And I hope this was a great year for you all, business-wise, on the personal side. And I hope that we come out January 1st, let's say 2025, swinging and learning and strategizing and having that scrappy mindset, right? And as far as insurance and annuities and marketing goes, hopefully that you've learned a ton of nuggets of value add and you're ready to go. You have your campaigns literally written down, noted, you know what your focus is going to be. It's our job every single week. And this is so important for us and for you every single week to huddle up, strategize, and make sure our agents have everything they need to go out and be dangerous when it comes to life insurance, sales and marketing, annuities, long-term care, living benefits, supplemental products, all the above. So we literally huddle up, like I said, and we say, okay, this week we're going to talk about the hottest IUL. You know, the next week we're going to get into hybrids, right? Life, annuity, LTC. What's the best carrier? Who's the best presenter, right? And that's how we came to today's presentation. Happened to be on top hybrid solutions. Also on the podcast, you know, we have every single month we do the live recordings. We have a group coming on this month in October. I'm super excited. It's going to be in about 2.5 weeks on the 18th. We have an agency out of Tampa that is newer to us and they're crushing it. So I'm going to pick their brain on what's working, what's not, and you all will get a chance to listen in to that podcast episode. So coming back full circle, the point is I want you all to learn if it's final expense, if it's third bedroom term sales, if it's estate planning strategies and tax saving strategies, all the above. So write down everything, use the Q&A box, okay, the Q&A pane. You can expand or minimize, and we're going to answer all of your questions. But the goal, again, is to have you all move the needle when it comes to insurance sales and marketing by teaming up with Levinson. Okay, let's dive right in. What we're going to do today is make sure you're on until the end. We have our question of the day, and our giveaway is an Apple iWatch. So we'll ask a question at the end. Whoever answers first and correctly, we're going to announce your name, and you win the Apple iWatch. You do have to be an active Levinson agent, okay, with at least one carrier. There's no charge for an appointment, so hopefully by now you're an active Levinson agent. But anyway, stay on until the end. Make sure you're paying attention because the question is going to be in one of the slides that you're about to see during the next 45 minutes or so. Okay, what I want to talk about, and this is probably the most important slide, is giving back to the community, right? Giving back to these victims, unfortunately, of this nasty hurricane. I think it was a Category 4, Hurricane Helene, right? We know the destruction. We've seen the videos and pictures by now, and it's horrific. So I just wanted you all to know, okay, on behalf of our agents, on behalf of our staff, we donated thousands of meals through Feeding America. This was the email that we put on this slide here, and this was Carrie's message to our agents and to these victims that need our help, that need our support. So I guess the point is by you all, and this, if I was an agent today, this would be important to me and close to my heart. You all need to know the business you're doing with Levinson, right, is always going to a good cause. October is, like I said, my birthday month, and we make a donation to the American Cancer Society. Obviously, with this past hurricane, we made a donation all on your behalf because of the business you send in through Levinson. So it means the world to us, and anything we can do to give back, hopefully it makes a dent and we can help a few families and people out there that are in need of our help. So anyway, it's a great cause, and hopefully we can continue to do these things and even bigger and better every single year. So let's keep moving forward. These are our agent testimonials, also important, close to our heart, because you're our customer, and we don't sell on a retail level whatsoever, as you know. In fact, it should be illegal. It is a conflict of interest. How can an IMO or a BGA, call it whatever you want, but how can a company like us process your business, okay, your clients and customers, and then also have a back room where we have a call center and we're marketing and selling to the same bucket of consumers? Okay, it's a huge conflict of interest, should not be allowed whatsoever. And we never, ever cross that line. So when I see these agent testimonials, it means the world, because you're our customer at the end of the day. So please jump in on our Facebook page, Google reviews page. The top one, these are all fresh, by the way, just came in, super great. I could not complete my work without the team at Levinson. Richard, we appreciate you. Bottom left, Ashley Keene is amazing. She responds instantly. Thank you for the attention to detail. Brian, right-hand side, this is a big one, and here's why. So we do something very different in the space. And we say to our agents, doesn't matter who you are, what part of the country, you're an agent with us, okay? You're writing with us, you're in our part of our family, right? You write $10,000 minimum paid annual premium, we give you a free batch of orphan leads, okay, on us. There's no small print, no gray area. Okay, this wasn't a newer agent. He's only been with us a year, okay? So he qualified for the free batch of orphan leads, sends me an email 2 days ago, okay? Let's check this out on the right-hand side. I wanted to let you know I submitted 5 IULs for 1 orphan lead you sent me. A husband, wife, 2 children, and a granddaughter for about $50,000 of annualized premium. Okay, it all went to Allianz. I'll take more of those orphans whenever you have them, right? And he put a little LOL. Thank you so much, GZ. Okay, that's everything, right? Just imagine you're getting 10 to 15 of these, right? This was 1 orphan lead. This agent was able to pivot and make a huge sale. Okay, this will change your year, and that's 1. Okay, he still has 9 to 15 to go. So you know the opportunity. So just make sure you're getting that business in. And I know most of you use on the average of 2 to 3 IMOs, which is fine. Okay, it just make sure you're writing enough business to get those free orphans on this side. I think that's the name of the game. Let's keep moving forward. Also, when you leave a review, we send you an IUL prospecting book on us, complimentary. So again, Facebook Levinson page, make sure you're following us, leave a review, go to our Google reviews page. It's in every email signature, every email we send out. Just click and tell us your thoughts, okay? And we want to hear from you. Okay, so let's fast forward. We're going to move to long-term care stats and trends and why there's never been a better time. So, you know, I put my agent hat on for a second, and I say to myself, you know, I'm an agent out here, right? And I'm partnering up with a bunch of P&C agencies, health agencies, CPAs, all the above, estate planning lawyers. Okay, now I'm focused on, you know, my big IUL sales, my large term cases, whatever it is. Okay, why do I need to be focused on long-term care, on living benefits, so to speak? Okay, LTC is an easier conversation. It's a great door opener. Okay, why? Because the policy triggers and pays while the consumer is still alive. So I always talk about these door opener strategies and, you know, use your social media paid ads and make it an easy, strong message, and then have an offer at the end. So the spin that I'm talking about is with living benefits and long-term care. It's a easy way to get your foot in the door because people want to hear more. And the proof in the pudding, okay, and we just pulled these stats, okay, and you'll see on the left-hand side, this is all from LIMRA, okay, which you can do a Google search and find these on your own. We're also going to send these in our thank you email. But look at the size of the opportunity here. Okay, 61% of people admit to needing LTC, but only 18% own it. Okay, and a lot of the younger professionals think, oh, this is for older people. Okay, no, that's not the case. Okay, in fact, when you're younger and healthier, the premium is much less, and you can lock it in by using one of these hybrids that Keith is going to talk about today. Okay, real fast, let's check out number 2. Over 800,000 Americans reside in an assisted living facility. The number is only growing. What else is growing, and you know this, is the cost of these facilities by the day. Okay, so your consumer, your client has to be prepared, and you need to be proactive to get the word out, especially to your clients, your friends, your network, your circle. Okay, so you got to be marketing this stuff. All right, we'll put this in the thank you email, like I said. But the last point here, the last bullet, I don't want to keep ranting. Bottom right corner, interesting fact: the number 1 day for long-term care claims, the day after Thanksgiving. Okay, we know what's around the corner, so there's never been a better time. The comp on these products are great. The renewals are even greater. Okay, you're talking about building your own annuity. Okay, you got to start looking into long-term care and living benefit and hybrid solutions. It's very, very important. And if you don't, I'm telling you right now, the competing agents, they're going to get the word out and they're going to make the sale every time. So know enough to be dangerous. If you're a veteran in the space, we have some great marketing campaigns for you too. So everyone's going to learn something today. You're going to walk away with some nuggets when it has to do with hybrids, LTC, with life and annuities. Let's keep moving forward. This is our 411 newsletter. So I know, and I totally understand, we have almost 100 carriers, thousands and thousands of products. It's very overwhelming, on top of all of our technology and the platforms and sales marketing, the campaigns, our turnkey co-branded libraries. I mean, we have so much stuff. The list goes on and on and on. So what we do every other week, we literally send out an email to your inbox. Okay, and if you're not getting this, let us know. And we take all of the highlights, what's hot, what's not, new products, discontinued products, carriers that went away, new carriers we just added. Everything is right here. Okay, it's a thumbnail image, minimize, expand, it's at your fingertips, live, done, you move on. Okay, so everything you need to know every other week sitting in your inbox. As long as you spend 5-10 minutes on this, okay, then you go out to doing what you're great at, selling and marketing. Okay, and we'll handle the back office. That's the name of the game. Let's keep moving forward. So I mentioned 2 seconds ago how many carriers we have, and I get it. Okay, yes, you can say, well, why do you need 92 carriers? And when there's only a handful of great IUL products and hybrids, and you're exactly right. But you have to remember, we as the IMO have to have a little bit of everything for everyone, every type of agent out there in this country. There's almost 1 million agents in the US today. So each company, each product has a little, maybe a separate underwriting niche the other carrier doesn't have, or maybe this might be the best product in the world, but there's no renewals. Okay, so we have you covered, all bases covered. Okay, every product type, every part of the industry, literally. So let's start here with LTC and hybrids. That's what we're talking about today. That's the focus. So on the top section there, these are standalone LTC carriers, Mutual of Omaha and NGL. I know years ago we had many, many options. Okay, today, if you notice the second section down, the hybrids are where it's at. Those are the most competitive products where you tie in life insurance or an annuity, okay, with LTC. And Keith is going to dive in deep and explain what's hot today. And we have a little surprise teaser. I'm going to wait a little bit to tell you, but some really cool stuff. And then we're going to move on to the bottom. That's where we have the, in my opinion, hottest annuity with LTC products and carriers to choose from. So again, we have all bases covered: standalone, life with LTC, and then annuities with LTC, bottom section. And then, by the way, we also have an awesome door opener that's literally costs the client pennies on the dollar, and it's also an LTC alternative product I'm going to show you in a little bit, and direct to consumer. So that's pretty neat, especially if you're running Facebook ads. Okay, let's dive in. We have our feature presentation today is by a personal friend of mine and our VP with OneAmerica. We have Mr. Keith Birkin joining us. He's going to dive in deep. Everyone sit back, relax, notes and nuggets. Okay, that's the name of the game today.
I love it. All right, thanks, Bill. You can see my screen and you can hear me clearly?
Yep, loud and clear.
Okay, awesome. Thanks, Bill. Fantastic job as always. I love the effort, what you guys are doing with Helene. I got to tell you, for those of you that most of you, of course, on here know the good people at Levinson and Associates. I can tell you, I'm doing this a long time. I know them a long time, and what I love about them is they're not just an agency. They're truly a family. And when you join them, you feel like you're a part of the family, whether you're an agent, whether you're a marketer, or whether you're a carrier rep. So I love the relationship, Bill. Thanks so much. You guys are always progressive, cutting edge, bringing the best products, the best marketing programs, and some of the best humanitarian efforts. So I absolutely love that. We are going to, today's a little bit of a refresh. Of course, we're always going to talk about, our asset care solutions, but I'm really excited to bring an enhanced view, if you will, of what we're doing with our annuity products. They're not new products. We have enhanced some of how we're underwriting it a little bit, what we're allowing, some of the maximum requirements on premiums being brought in, but it's kind of a newer way of looking at what we can do with our annuity care products. And it's a fantastic way to enter into the fourth quarter and end the year, because our average turnaround time on some of the solutions is around 22 days. 4 knockout questions, immediate approval with e-application on our base annuity solution. I'm going to really get into that. I'm really going to lead with that today, and then of course talk about our asset care solutions as well. But we're really excited about the marketplace with what we can do with our annuity products right now. And we're going to get into that and show you how to market that with some of your existing annuity business on the books with some older clients, even if they don't have existing annuities, just older clients right now that don't have a lot of plays and abilities to look at possible long-term care solutions because of their age and health. There's some great opportunities here, and we're going to discuss that. But before I get into the solutions themselves, I never do a presentation without first showing you how to bring up and talk about long-term care. You can have the greatest solutions, the greatest products, the greatest sales idea in the world, but if you're working with people that don't know they have a problem and you're not presenting this to them where they need a solution for an existing problem, you're not going to get very far. So we always like to talk about what's the best way to set the stage for solving for long-term care planning. And the way to have this conversation, it's really as simple as asking 2 questions. The first being, look, Mr. and Mrs. Jones, I don't know if you'll ever need long-term care, but God forbid if you did, have you considered the impact it's going to have on your family, your spouse, your kids who have jobs and kids of their own and homework and soccer practice, because the very people you swore your whole life that you'd always protect are the ones you impact the most, God forbid, if you need long-term care. And the next question is, if you needed care, how are you going to pay for it? Are you aware nothing pays for this except your own income and your own assets, which you've worked your entire life to accumulate, hopefully live out the independent retirement you've always dreamed of, and maybe even do some legacy planning? What are you currently allocating out of your retirement portfolio to pay for the growing cost of long-term care? You set the stage by asking these 2 questions. And before you go in with a hypo or an illustration and talk premium and benefits, you got to make sure you're having the conversation with them and setting up the need. And another way to do this is put into perspective the cost of long-term care and the different places that they can pull from to pay for those long-term care expenses. And there's really only 4 places, right? If you need long-term care and all of a sudden you got to start pulling money, there's really only 4 buckets you can pull from. You can pull from your qualified money, you can pull from your non-qualified assets, you could use cash, or you could transfer the risk into some kind of a long-term care solution. Well, let's just take a look at the true cost of pulling from any one of these 4 buckets. What this slide is showing you here is for every dollar of long-term care expense that you would incur, if you were to use your qualified money for every dollar, it's really going to cost you $1.30, assuming you're in a 30% tax bracket because you're paying income tax to use qualified money. Well, if you used your non-qualified assets bucket, for every dollar, you would need $1.15 because of capital gains tax. Well, if you use cash, well, that's dollar for dollar. You're not paying any tax on that, but certainly that's not good value on your money for something that as an individual has about a 75% chance of happening, or as a couple, there's about an 82% chance of happening to one of you. So what's the best solution is to transfer the risk on something that has one of the greatest impacts on you and your family as you age, and get roughly 33 cents on every dollar. That's your cost when you transfer the risk to an insurance company for long-term care. So I love putting that into perspective before I start jumping into the solutions themselves. And we've even created some tools and resources to help you along the way. I love this plan for care. This also puts into perspective what your clients are going to be looking at, what they need to do and be thinking about going ahead, God forbid, when they need long-term care. It's a great exercise for you to do, whether you're a financial advisor, an RIA, a life agent, annuity agent, whatever you're selling to your clients. If you want to look for a good way to start talking about long-term care and setting the stage, this is something that the Levinsons have, they can provide you with. It's a great way of setting the stage, getting into the conversation. So I'm going to get off the soapbox of, why this is so important and how to talk about it and get into our solutions. But I never like to just talk about product and solutions without first showing you really how to present it and have the discussion. So we're going to talk about and start with our annuity care products. Now, with annuities, standard annuities, there's always two phases, right? You have your first phase, which is the accumulation and growth. You're building interest and gains. And if they're non-qualified annuities, this is a tax-deferred season, right? The money's coming in, you're not paying tax while it's growing. But then the second phase, of course, is when you start using it, payout and distribution. And if they're non-qualified annuities, as we all know, you're going to pay tax at that point. Non-qualified annuities are tax deferred. They're not tax free, meaning they're going to grow and not pay tax at that point, but you'll pay tax on when you pull it out and start using it. Some interesting numbers for you to know about annuities. For those of you that don't really sell it, what you need to know, whether you're selling them or not, is your clients have them. Just in 2023 alone, there were $385 billion in annuity sales, mostly purchased by baby boomers, which is now the second largest segment of the population, but still a big part of the population. The oldest baby boomer this year is 78 years old. 10,000 people a day are turning age 70. It's a big part of our population, and they are buying annuities and they're aging with the annuities. And the government looked at this and said, let's get some information about this. And what they found out, some of the behaviors of the people that own these annuities is they're not using them. They're great for accumulation. You're getting all this growth and you're not paying tax on it. But if you do use it, you will pay tax on it. And what do Americans hate more than anything? Paying taxes. So in this Gallup poll, we found out that 84% of people that own these annuities are holding on to them. They're not turning them on. They're a financial cushion. God forbid if they or their spouse lives long and might need it and they've outlived their income. Almost 80% are holding on to them because they don't want to be a burden on their kids with a variety of different expenses. And almost 70% are holding on to them thinking they're kind of like my long-term care fund. God forbid I need long-term care. I got this annuity sitting here. I can use that. So the government, which is always looking for ways to further privatize long-term care because it's such a burden on both Medicare and Medicaid, in the Pension Protection Act in Section 844, allowed for the creation of Pension Protection Act annuities. What's a Pension Protection Act annuity and why is this important to you and how does this relate to our annuity products? Well, our annuity products at OneAmerica are in fact Pension Protection Act annuity. What is that and how does it differ from a regular or existing annuity? Well, here's a regular annuity or just an existing annuity now. In this example, this man or this person purchased an annuity for $50,000. And over time, it grew with interest, tax deferred, by another 100,000. So now it's worth 150,000. So like we just showed, almost 80% of people are buying these annuities. They're holding on to them. They're not using them. And if God forbid something happens, some kind of a catastrophe or something like long-term care, they're using their annuities for that. So let's say that that person did that here. Well, what would happen is all of this tax deferred gain would come out first. They'd pay tax on that. Granted, it's a great bucket of money to use for long-term care, but they're going to pay tax on all that gain. But what they can do now is take this existing annuity with all this gain and 1035 exchange it into a HIPAA qualified Pension Protection Act annuity. And that means all of this taxable gain is now 100% tax-free if it's used for long-term care. That is a phenomenal reason to run and not walk to anyone you know that's sitting on one of these existing non-qualified annuities and doesn't need it for income, which we already established is a great percentage of the time. So enter Pension Protection Act annuities. They've got an enormous amount of value, especially when you compare them to existing annuities. You get tax deferred growth in both, but only Pension Protection Act can actually make that tax deferred growth tax free when you actually use it for long-term care. We can even take an individually owned annuity and convert that over to a joint annuity. So a single person can bring that over because these annuities can be joint if you're a couple. We offer our widely heralded claims concierge benefit on our annuity products, and we'll talk about that at the end. And you're still going to get pretty good, decent growth on these products because we have an indexed annuity as well as a fixed annuity. So I want to talk about our Pension Protection Act annuity, our index care annuity, show you how it works. We've always had this, but I'm going to show you a little bit of a different spin on how to position it for people who are looking to self-insure, and then a really great use for this as a base annuity option for people coming from non-qualified annuities that might be older and might have maybe some insurability issues. So how does our indexed annuity care product work? It's really simple. You have the base of the product, which is like any indexed annuity, right? It's going to grow based on the performance of the S&P 500. And there's a few crediting strategies you can choose from. You can choose a fixed rate, which is 3%. You can choose an annual or a point-to-point. Honestly, I don't go into that, and I couldn't urge you anymore to not have that discussion with your clients. The only things you really want to discuss in regards to the performance and how the base policy will increase in value is number one, that the guarantee is zero. It's actually a little better than that, but they can never lose money. I mean, the S&P 500 can absolutely tank or do nothing, and they will never lose their money. That's number one. Number two, there's a safeguard against the possibility of the S&P not performing well, and that's a step-up bonus. So when your clients need to use this product to pay for long-term care expenses, they're going to get a bonus on top of what their growth already is. It's really easy to understand and explain how that bonus works. Whatever year you are in owning the contract, that's how much bonus you get. If you buy the policy and 5 years later you need to turn it on for long-term care, you're going to get a 5% bonus. If you buy the policy, you own it for 10 years, and 10 years later you need it for long-term care, you're going to get a 10% bonus. It goes all the way up to 15% and caps out there. Now, the base of this index can only be funded using a single premium. And when you need to turn it on for long-term care, if you're applying as an individual, it'll pay out over a 24-month period. So basically, you put your money in, it's going to grow based on your crediting strategy. You're going to get a step-up bonus as well when you need it for long-term care. And then the way we decide how much money you get every month is we divide all that by 24 months if you're an individual. If you're a couple, we divide it by 30 months. But a lot of people like knowing that they can put their money in and get significant leverage if they really need it for long-term care. Let me explain. Nobody buys our annuity care products because they're looking for an income annuity. Just like nobody buys our asset care, which is our whole life long-term care products, because they want life insurance. This is about long-term care. And if you want substantial coverage, you can go beyond just the base of the product and leverage your dollars as well. If you're an individual, you can get another 24 months or another 48 months additional long-term care, or even an unlimited lifetime of long-term care that you can never ever exhaust. Peace of mind knowing that, with Alzheimer's, where you can live 8 to 20 years from the time the disease onsets, you'll never ever outlive your benefits because you can get these multipliers with this continuation of benefit rider. I love the fact that you can be 85 years old and get substantial long-term care coverage, all the while your money sitting here in a base annuity, always maintaining the same narrative of our Care Solutions product suite entirely, which is live, quit, or die. You're always going to get value. Those are the only three things that can happen with any of our solutions: live, quit, or die. You're going to live and need it for long-term care, in which case you got the base annuity and one of these multipliers. You're going to quit, in which case you can get your money back minus 9 years of declining surrender charges, or you're going to die, and in which case we're going to pass this benefit down to a beneficiary. Now, let me say, our benefits are always tax-free for long-term care, but any gains that are passed down to beneficiaries, gains are always taxable upon death. I don't like to call it a death benefit. That always assumes it's a tax-free handoff upon death, but all the money will pass down to a beneficiary. Now, we've always had this. This is our indexed annuity with the base and the rider, and this is showing you how we work our step-up bonus, which is, again, whichever year of the policy you're in, you get that much bonus. But let me give you a nice example here to give you even better perspective, a little bit of a case study. Here we have a female, age, I gotta move to go to webinar. Age 70, and she's got 150,000 sitting in an existing annuity. A lot of that, let's say fictitiously, is gain. And what we're able to do is take this annuity worth 150 grand that's got all this taxable gain associated to it and do a 1035 exchange into our indexed annuity pension protection act product. Now, the way we're going to do this is, I told you, you can single pay the base of the product, but you can single pay the continuation rider as well. And in this example, we chose a lifetime benefit. So she's going to bring over this 150 grand, of which 112,000 and change of the 150 is buying the base of the product, and the remaining 37,000 and change is buying the lifetime benefit rider, so she'll never run out of benefits. So this 112,000, this is year one. This is going to increase over time. Remember, this is an indexed annuity. She'll choose a crediting strategy, so it's going to go up every year based on that crediting strategy. And when she needs it for long-term care, she'll get that step-up bonus as well. And we'll divide all that money by 24 months, and that'll let us know how much she's going to get every month to use for long-term care. Let's just say, for argument's sake, she buys this and needed this day one, right? It had no chance to even grow. Well, she brought in 150, the 112,000 in the base divided by 24 months is going to give us $4,731 a month. So that's 150 over 24 months. So that means she's going to get, if she needs this for long-term care, 4,731 tax-free dollars every month until she's exhausted the 112,000. That's the value of the base account for long-term care. But even when she has exhausted it, remember, she bought a continuation of benefit rider, meaning we're going to continue on this 4,731 forever, for a lifetime. That's because the 150 is buying the base and the rider together. We've always had this. This can always be done. And by the way, for those people that are thinking of self-insuring or thinking, I'll just keep my annuity in place, just so you know, you would need an annuity earning 37.8% on 150 grand to be able to yield $4,731 a month for long-term care. Once again, tax-free. Another way of doing this is to keep their money intact. So this 150,000, instead of using that to pay the base and break a chunk off of it to pay for the rider, let's put that 150,000 all into the base. I like positioning this for someone who's thinking of self-insuring. Because all you're saying is, look, you're sitting on money, whether it's just sitting in an existing annuity now, or whether you're working with clients that are loaded, they've got a ton of assets. All you're saying is, let's take 150 grand of your money and you're just going to buy an annuity, right? That's just like another investment. It's like self-insuring the first 24 months because this 150 grand is still your money. If you die, you don't need it. It's going to go to a beneficiary. You can always get it back minus surrender charges. This right here is the essence and definition of self-insuring. However, what you're offering them is, go take a look if they were to buy a traditional long-term care policy. Again, this is an age 70-year-old female, right? She's getting the lifetime continuation of benefit rider. She has the capability of paying for this with an annual premium as well. And as far as I know, there's only one traditional long-term care company out there right now even selling unlimited lifetime benefits. Go price out for a 70-year-old female getting $6,313 a month for long-term care for a lifetime, what that annual premium would be. I guarantee you it'd probably be over $20,000 a year. So in this concept, you're taking the 150 grand, it's all going into the base of the policy. What are they really buying? They're just moving the money into annuity. They're self-insuring the first 24 months, but you're giving them the capability for pennies on the dollar to get a lifetime long-term care plan for $43.75 a year. That would be the annual premium for a 70-year-old to get over $6,300 a month for a lifetime. That is unheard of value. I love positioning this for people that are looking at self-insuring. It's what you're doing for the first 24 months. You're getting a lifetime long-term care policy for a 70-year-old at $43.75 a year. It's unheard of. It's unvaunted quality and leverage on their money. By the way, for your clients that own businesses, the businesses can stroke the check on this, and it's 100% deductible to their business. For clients that own or that have HSAs, they can use their HSAs dollars to pay for this as well. Now, we've always had this, but we've never looked at using the indexed annuity care product as a measure for people who are looking to self-insure. I love showing that enhanced concept. But what we enhanced, and we did this in August of this year, was looking at the indexed annuity product and looking at the value of just selling the base as is. What did we do? First of all, we increased the premium maximum up to $1 million, and we're even paying compensation on that at this point. So you're getting the ability to take $1 million of existing non-qualified annuity dollars over. They might have all this gain and growth in an annuity, and there's a lot of people sitting in these aging annuities, and some of them are being forced out by the carriers. Some of the older annuities, people in their late 70s and early to mid 80s. We'll take all the way up to the age of 85. As a matter of fact, if we're looking at the base option alone, upon exception, we'll even go up to age 87 and take up to $1 million. So what are the advantages? The first off, again, we'll go up to 87 on exception, always age 85. The value of our base annuity, it's not about the accumulation and growth. You'll probably get better growth by buying a regular index annuity. It's about the accessibility, the ability to get this money out tax-free for long-term care, as well as the ability to divide it over a 24-month period. You're going to get more access on a monthly basis to all those funds than you certainly would out of other annuities with typical distributions. And again, it's tax-free. Let me show you the true value here. And the other thing I love about this, one of the biggest enhancements is it is 4 knockout questions only to be acceptable, and it's immediate approval, and that's the big enhancement. If you apply through our e-application, you only need say no to these first 4 questions, and you are going to get immediate approval. Our average turnaround time from submission to paid on our base annuity option is 22 days. You just got to say no to these 4 questions, which are A, do you have HIV? B, are you using any of these assisted devices such as wheelchair, walker, dialysis, oxygen, or respirator, or lift? Are you currently in need of long-term care now? Basically, do you need help with any of the 2 out of the 6 activities of daily living? Or do you have any of these major conditions? Multiple sclerosis, muscular dystrophy, Lou Gehrig's, also known as ALS, Parkinson's, or Alzheimer's, or massive dementia. If you can say no to these 4 questions, which the majority of people can, you are going to get instant, immediate approval on our base annuity care solution. So again, what's the real value there? Let me show you from a dollars and cents standpoint, the kind of leverage you're going to get on that. Here's an age 77 female, and we're showing you here the indexed annuity care on the fixed rate. Annuity care on the fixed rate. This is showing you year 1, we're bringing over 200 grand. And this is not the index product. This is the annuity care product. 200 grand coming over. And just at the end of year 1, we're not getting a lot of growth on it at this point. You'll look at about 208,000 as tax-free long-term care benefits, dying never needed, total account value at 207. But 10 years down the road, that 200,000 will be worth 306,000 and change for long-term care, and an account value, if upon death never needing it or surrendering, of 291,000. Now the indexed annuity product, which is what I just talked to you about, we're going to look a little bit better. Here's a female, age 77. Again, year 1, we're not getting a lot of growth yet. It's just the first year of the product. We're taking over $200,000, and that's going to yield a long-term care benefit of a little over 212,000. Not bad, but remember, the real value here, that can all be used tax-free for long-term care, and she's going to have access to that to the tune of over $8,800 per month. But again, she's 77. Chances are she probably won't need this for like the next 10 years. Look what we can do with 200 grand for the 77-year-old by the time she's 87. We'll take that 200 grand and turn that into almost 400 tax-free long-term, 400,000 tax-free long-term care dollars, 395,000 and change. She dies, she never needs it. Again, what is she losing? The 200 grand is worth almost 360,000 paid out to a beneficiary. Of course, she wants to quit. She gets her money back. Again, this isn't about the growth. You might get better growth with another indexed annuity, but you're not going to get access to 16,000 a month. 100% tax-free for long-term care with, again, nothing to lose. You're taking 200 grand. If you died, you never needed it, it's worth 360. You need it for long-term care, it's a tax-free $395,000. Such incredible value. And again, 4 questions, immediate approval. This is for the base only of the product. We're bringing over non-qualified annuity dollars, making them tax-free for long-term care. I love the concept of the base annuity product. Again, 4 questions to qualify. Now, I showed you the value of buying the base product and getting the continuation of benefit rider, where you can massively leverage, even get a lifetime benefit. For that, you would not only have to answer no to those first 4 questions, but you would also have to be able to say no and not having any of these impairments as well. So what I urge you to do is, if you have a client that really does want to look at getting the base and the rider, please use our preliminary underwriting and make sure they don't have any of these impairments. If not, just answer no to those 4 knockouts and you can get the base only product. So I really wanted to lead with our annuity solutions. It's a great way leading into long-term care awareness month in November, leading into the 4th quarter, being able to get this business on the books. Like I said, the average turnaround is around 22 days on these. There's nothing easier than 4 knockouts, immediate approval, tax-free long-term care dollars, and pretty darn good leverage on the money. So I, of course, always want to talk about asset care. We've had many, many different trainings with Levinson and Associates, both via webinar and live, and we're going to be doing a live training at Maggiano's as well upcoming. But I still want to, for those of you who haven't seen our solutions in the past, I want to briefly touch on our asset care products as well. We showed you annuity combined with long-term care. Asset care is our whole life solution combined with long-term care as well. What I love about this is there's so many different ways that we can work with your client's money. We can take, for those people with a lot of assets, we can do one lump sum single premium, be one and done. For clients that are maybe a little more fixed income, we can do an ongoing recurring premium payment option. We call that pay to 95. Maybe for clients that have really good income executives earning a lot of money, we can do limited pay options, a 5 pay, a 10 pay, a 20 pay. And I love our capability. We're one of the only carriers in the industry that can work with your clients' qualified money. A one swipe solution to working with IRA, 401k, or 403b dollars. And the beautiful thing is we offer a combined value proposition you're just not going to see anywhere else lumped together all like this. If you do any of our recurring premium options, when your clients go on claim, we're going to waive the premium. Remember, with our asset care product as well, our whole life with long-term care, it's a joint life solution too, meaning a couple can apply together on one contract. And we define a couple not just only as people who are espoused, married. That's defined as anyone in a civil union or domestic partnership as defined by the state that they live in. So if you get a couple applying together, that's one premium on one contract, only one of them has to go on claim and we will waive the premium on the policy. Not only will we waive the premium, we'll still consider that year's premium paid and earned into the policy as well. I mentioned we're the only solution that will truly work with qualified dollars, offering a 25% premium bonus. I'm going to show you that. And everyone always associates long-term care with the waiting period. There's always an elimination period, right? You got to pay out of pocket before you can start using your benefits. With OneAmerica, we have a 0-day wait if you're going to use your policy at home. The only waiting period we have is if you go directly into a facility. And of course, our calling card, the peace of mind in knowing that if you buy a lifetime benefit, your benefits are never, ever going to run out. Nothing illustrates better than this slide our ability to work with any client's portfolio. Like I said, we're going to take premium in so many different ways: single pay, ongoing premium, 5, 10, 20 pay, qualified money. Here we're showing you a 62-year-old couple, and they want to make sure that when they need long-term care, they're each going to get $6,000 a month each for long-term care. They die, they never need it. They're going to get that death benefit of 200 grand, and their benefits are never going to run out because they're getting a lifetime benefit. So the question is, Mr. and Mrs. Jones, where's your money? Let's find your premium comfort zone to help you buy this policy. Here's all the ways we can do that. You can come up with an annual premium of a little over $10,600 a year. If you got a lot of assets, you just want to be one and done and give us one check, you can come up with a single premium of a little less than 148 grand. My favorite way to design our solutions is kind of a hybrid funding method. Instead of coming up with a big check of 148 grand or an annual premium of over 10,000 a year, give us a smaller check and a smaller premium. You can pay for the base of the policy, the life insurance with the single premium, and pay the rider off with an annual premium, much like I showed you with the indexed annuity care product. So instead of giving us 148 grand, give us only about 90 grand. And don't give us 10,600 a year, give us a little over 4,100 a year. And again, this annual premium can be paid by a business and can be paid with HSA dollars. We talked about for executives or people with a lot of income, you can do a 10 pay, a 20 pay, we even have a 5 pay. And I love our qualified money solution, which I want to talk about right now. We call this solution annuity funding whole life. It can get a little confusing because we do have annuity care products. So is this an annuity product? No. This is just our whole life combined with 10 pay policy. But what we do is we'll work with your clients' existing IRAs, 401ks, or 403bs. How do we do this? It's really simple. We set up an IRA in your client's name at OneAmerica. And in that IRA is sitting just a vanilla fixed deferred qualified annuity. However, the first function of that annuity is to give your clients deposit an immediate earned income bonus of 25%. So we're going to roll over a lump sum of money out of your client's existing 401k IRA or 403b into the IRA or OneAmerica, where it goes into this annuity. We give them a 25% bonus, and then we use that money to fund a 10-pay policy with us. Let me show you how this works. Follow this slide. Here's the same 60-year-old couple. We're just going to grab 150 grand out of the husband's existing IRA. We're going to roll it over into an IRA at OneAmerica. So we're going from an IRA to an IRA. There's no taxable event here. Remember, in this IRA with us is sitting this qualified annuity, which is going to give their money a 25% bonus, which in this example is an additional $37,500. So they're rolling over 150. We're giving them 37.5. So now sitting in this IRA, in this annuity at OneAmerica, is now a total of $187,500. And all we're going to do is use this money to fund 10 equal payments into our asset care, whole life, long-term care policy. So we're just going to take 10 distributions out of this, one a year for 10 years. So in this example, that would be $18,750, because that multiplied by 10 is going to give us the $187,500. So year one, we take out $18,750. So we've drawn down the IRA and the annuity by that much. Is this taxable? Of course it's taxable. We're pulling it out of an IRA, but remember, it was taxable where it was originating anyway. But what we were able to do was move 150 grand over in 1 year, not realize all of that taxation in this year, give them 37,500, which in a zero-sum game is going to offset the majority of this taxation anyway. And on top of that, just a little cherry on this, for clients north of 73, this will satisfy, or at least a portion thereof, the required minimum distributions. So over 10 years, we're going to fully drain down this IRA and this annuity until we have now fully funded this 10-pay policy. Again, the same 60-year-old couple getting that same $200,000 death benefit, roughly, that same $6,000 per month per person long-term care benefit on a lifetime policy. And what's beautiful about this, even though this originated out of an IRA, this gentleman was able to add his spouse to the policy. Lifetime benefit. We took 150 grand of qualified money, turned that into $6,000 a month per person, tax-free, for long-term care for a lifetime. The same narrative, live, quit, or die, they're getting value. Two really interesting caveats to this. Number one, remember, anytime if there's a claim on our policy and there's a recurring premium, we'll waive premiums when they go on claim. If either one of this couple goes on claim at any time during this 10-year funding period, we will not make the withdrawal from the annuity to make the payment into the policy. We will leave it there. Or the other option is they can pull out the payment, they can pull out the withdrawal, pay tax on it, and pocket it as cash. The other interesting caveat to this is, let's say, unfortunately, the husband who does own the IRA is not insurable enough to qualify for coverage. Ideally, of course, we always want husband and wife on the policy, but you will see, of course, certain scenarios where the husband just doesn't qualify. In that scenario, we can still use his IRA, his 401k, or even 403b, and set this policy up on his wife. He would be the owner of the IRA and the annuity would be in his name, but the life insurance policy and the insured would be under the wife. Ideally, we want them both. And I can't tell you how many times I hear when a couple has one of them that's not insurable, they're like, you know something, if we both can't get it, I don't think we're going to do it. I've never heard anything more nonsensical. Your job as an agent, as an advisor, as a fiduciary is to say, no, at this point, now you have to do this. You guys are now so financially exposed to the husband needing long-term care, and you guys are going to have to use your own money for him. You need to do this now for the insurable spouse. At least get protection there. This works so well with the Secure Act, which changed how inherited qualified accounts are now treated. Used to be you had the term of your natural lifetime to pull money out of an inherited qualified account. Now, if you're like 60 years old and you just inherited your parents' IRA 401k, you now have 10 years in which to get the money out of that qualified account. Doesn't that work fantastic with this solution? This is a 10-year funding solution. So you got clients that just inherited a bunch of money from their parents' qualified accounts. Why not take a portion of it, fund this policy, protect their new nest egg along with their existing nest egg, and most importantly, protect their families. I mentioned a moment ago about one of the great benefits about our indexed annuity and our annuity products, and of course, even the asset care solutions, is our claims concierge. This is a huge part of our policy. When you go on claim, you're going to call our claims department, which by the way is not on some offshore call center. This is downtown in our corporate tower, our 35-story building in downtown Indianapolis. And what you're going to get when you call our claims department is a red carpet, white glove treatment. You're going to get to work with a claims concierge. He's going to sit down, explain your policy, how it works. They're going to help you with your claims paperwork, help you put together a plan of care, and be there to really help you and your family. What I love is the concierge representative that you get is the only person you're going to work with. You're not going to call back in every time and get a different person. You get to develop a relationship with our claims concierge. It is one of the biggest selling points of our solutions. And one thing to mention, people will ask all the time, is your policy reimbursement, indemnity, what have you? This policy right now is a reimbursement policy, but one of the things we're able to do, your claims concierge representative can work with any home care agency or facility that the clients are working with and set up a direct billing arrangement with them. Meaning the client doesn't need to pay bills, hold those receipts, and submit them for reimbursement expenses. What you can do is just set up an agreement directly between OneAmerica and the agency the clients want to use, and we're just going to pay them directly, and nothing easier than that. So look, I know I covered a lot of ground with you right here. I threw a lot of information at you. What I want to impress upon you is don't get so lost in remembering everything I just told you. What I want you to be able to do is be able to remember, you know what? I got clients that are in the upper to mid 80s. They got a bunch of money sitting in a non-qualified annuity, or they got a bunch of money sitting around and they don't have long-term care. I need to call Levinson and Associates because I got a guy that's perfect for that annuity product. You're sitting in front of a client that's got a bunch of qualified money. You don't have to remember how it all works. Just remember, you now have a great solution to work with clients that have qualified money. Pick up the phone, call Andrew, call Josh, call Bill, call Carrie, say, hey, I got a guy, run me through that solution. Just remember your opportunity going forward. You got a great team at Levinson and Associates that can walk you through the solution. So, Bill, I want to thank you so much for having me on today. I don't know if there's
Keith,
any questions.
I'm not letting you go so fast though. First of all, for everyone listening, we got about 5 minutes left. We're going to make it quick, but I want to ask you a quick question. Just
Sure.
between all of us listening today, I saw that there was a new product filed. So I know you can't, we're a few days out, but can you give us a few teasers? Anything that you can share just for the Levinson team?
You're killing me, Smalls. I would love nothing more than to be able to have that discussion. And here's what I'm going to ask. Let me put it this way. We're excited about what is coming. What I'll say is October 7th, we are able to communicate to the field. Look, it got filed, so word got out. People know it got filed. But October 7th will be the first field communication. It's coming. What I'll tell you is you're going to like what's coming. I'll give you that. Bill, I'd love to tell you more, but my hands are tied, unfortunately. But look for the communication. We're just a few days out from it. You guys are going to be pretty excited of what's coming.
Okay. All right. I'm going to let you slide on this one because then we'll have you back live here in South Florida. So by the way, for any South Florida agents that want to attend the live training, it's a breakfast event. Please let us know and we'll get you up and running Give me 1 second, and then we'll jump into our slides here. Keith, thank you once again. What I want to do is I have about 3 to 4 minutes left, and then we'll put a bow on this. We're going to send out a thank you email to all the participants that were listening today. We'll include brochures, all the marketing pieces. And then I also want to say, and Keith mentioned this, but you have a guy, you have a girl, you think this product solution could be a good fit, call any one of our marketers. Josh Hoffman is also a great go-to when it comes to this. So you can rely on our staff with questions, and we'll get you everything needed to make the sale. The first slide here real fast is to get started with OneAmerica. So what I want to do is show you real fast yellow arrows on our homepage of levinsonandassociates.com. Then all the marketing materials are on the right-hand side. And then if we keep moving forward here, everyone wants to learn how they can win cash, $500, and we make it so easy. Okay, 5 apps on InsureMeNowDirect.com. And these are all the low-hanging fruit products, easy door openers. There's a $50 minimum per month premium, and then $500. So 5 apps, $50 minimum, each app, $500 cash, and you're in. Plus, most of these products, it's a full pass-through commission, no reduction, and renewals. Let's keep going forward. What I want to do is talk about, in my opinion, the ultimate LTC door opener. Okay, and the cost of this is more than 50% less than a typical standalone LTC policy. The max benefit is $13,500 a month. It's basically guaranteed issue if your client can answer these 2 questions no on the bottom. Okay, and you know most of your clients that are applying can answer this no, which means guaranteed issue, and it's on Insure Me Now Direct. So that's a no-brainer, great for social media marketing. Let's keep moving forward. Other hybrids that are offered here at Levinson, we handpick top products and carriers all the time. We never have a Burger King and McDonald's on the same corner. As you know, left-hand side, OneAmerica at the top, Lincoln, Securian, Nationwide, and then the top right-hand corner is Manhattan Life with that ultimate HHC door opener I just mentioned. Okay, this is a great sales idea. I want to switch gears, talk about strategies, marketing, social media ads, you opening doors and getting a chance to share your story. Okay, so this is a very simple approach with the 3-legged stool. You ask your your consumer these 3 questions. Do you want to retire one day? How do you plan to protect your retirement investments? Can a 3-legged stool stand with 2 legs? Absolutely not. Those are the 3 legs: lifetime income, long-term care, wealth transfer. As soon as you're done speaking, they're going to say, you know what? I need a policy. How much does it cost? Boom, you make the sale. The door's wide open. Okay, we'll include this in the thank you email that's going out today, the LTC napkin presentation. Let's keep moving forward. LTC marketing, this is what's working today, okay? For some of your competitors, what you're gonna notice about this, you don't have to reinvent the wheel, you just change a few spokes, okay? But look how simple. On the right-hand side, have long-term care insurance questions. Our team has years of experience helping clients file claims, understand policies, and dispute denials. I always talk about educating the consumer. That's exactly what they're doing. That post generated over 40 comments, which are potential leads. So, and then the left-hand side, okay, it's not rocket science. It's just a did you know post. Very simple. Let's keep moving forward. Speaking about annuities, knowing enough to be dangerous. First of all, this coach, Charles, is, when it comes to annuities, my favorite hands down. Okay, we recorded live an 8-week presentation, 8 hours of content, the ultimate workshop that I've ever seen personally. Okay, so once you're active with Levinson, if you want access, let us know. We'll get you the entire workshop, and then you can watch it, listen, and learn at your convenience. But I'm telling you right now, if you want to tap into the space, there has never been a better platform than what we're offering with this 8-week workshop. Let's keep moving. What I want to do next is switch gears again. We'll talk about our podcast. So real fast, left-hand side is life settlements. We brought in Steven, who owns LS Hub. He's our broker. And all I'm saying, you have an existing case, okay? Doesn't matter, term, whole life, IUL, UL, the client's over 65, not healthy, let us know. We'll get you an offer within a week. The right-hand side is the president of Manhattan Life. I sat down with him for an hour and we bring up this great door opener, that HHC product that I spoke about earlier, no brainer. Okay, so you got to check these out. 2 hours of education, literally, and it's all free. Okay, almost done. One more slide and then we'll put a bow on this. I know it's late, I apologize. Our future weekly training events is what you're looking at right now. The top section there, our agents were asking, they said, hey, we need a DI sales 101 course. I want to learn more. I want to get more involved. So we're sitting down with the VP at Assurity Life for an hour on the 10th. Definitely don't miss that webinar training. Just under that is the new TransAmerica Instant Decision Final Expense, just launched. That's on the 17th. Then I bring in Coach Chris on the annuity side for our Q4 update. In the annuity space, it talks about all of the latest products, carrier sales ideas, what's working, what's not, and what does the industry look like in 2025? Okay, how can you be prepared and proactive to be involved in the annuity space in a great way? On the bottom, we have the F&G relaunch, all of the latest IUL life products, and we're going to touch on annuities as well. My last slide, question of the day. First, I'm going to tell you what my Positive Tuesday quote is, because I do this every week, which you should be doing the same thing, by the way, getting your name out there. Focus on the prize. You will never change. Focus on change, and you will get the prize. The takeaway here, there's never been a better time. It's about change. It's about being able to pivot, okay? Trying new things. Okay, you never were on a Zoom call before. You want to come up with a great presentation. Do a trial run with your niece, nephew, grandkids, spouse, whatever. Okay, try that 3-legged stool approach. Try one of these social media marketing pieces. Try a Facebook paid ad. Okay, you got to start somewhere, but you got to put your right foot forward and try. My question of the day, giving away an Apple iWatch. Make sure your fingers are on the keyboard. You're ready to rock and roll because you got to be quick. Question is, I mentioned the $500 Insure Me Now direct contest. The answer, you have to tell me the minimum number of applications you need for the contest and the minimum premium per application. Okay, so it's 2 answers. How many apps do you need to get the $500? And what's the minimum premium per application to get the $500? Tell me those 2 answers. You walk away with the new Apple iWatch. Andrew, who was first? Who was correct? Do we have a winner?
We have Maria L. Maria L.
Maria L. The answer was 5 apps and $50 minimum premium per app. Congrats, Maria L. Thank you to every single one of you that stayed on for 70 minutes. I apologize, we went a little over. I hope this was worth it. I hope you walked away with at least one nugget, okay? You have a guy, have a girl, pick up the phone, let us know. We'll get you the illustration. We'll help you literally make the sale. We'll do everything but speak to your client. We're here for you every step of the way. Have a great week, great weekend, great selling. Thank you again, everyone.